Sanjit, hi, good to have you with us. How have you been?
Doing great, Ashu. Thank you so much for having me on your show. Really appreciate it. Yeah.
Thanks, Sanjit. Sanjit, this is a conversation I've genuinely been looking forward to, right? And largely because of your very deep experience in a developed economy, right? I mean, you've been in the US, right? You've been investing in the US ecosystem for the longest time. You've been evangelizing innovation, the cause of innovation, right, with very many large corporates, right? And I think that makes it a very interesting discussion, right? Because you essentially very uniquely you're bringing on all the stakeholders together, right? I think which is very unusual, right? You don't really come across many institutions who are playing across all of these quadrants, right? That makes it exciting, right? With that, Sanjeev, it'd be lovely if you could give us a quick introduction, and we dive into the session from there.
Yeah, absolutely. Yeah. Thank you, Ashu, for the opportunity and thanks for having me again. So, as you know, my name is Sanjit Dang. I'm based in Silicon Valley, have been here for 20 plus years now,
Right.
and came to the US for grad school. I did my engineering PhD here and then moved to Silicon Valley and
Right.
have largely been in the venture capital industry for a number of years. I was at Intel Capital, where I drove investments in enterprise software companies up and down the stack,
Right.
and invested in some iconic companies like DocuSign and Cloudera,
Right.
and then created my own fund where I'm the chairman and co-founder. And the fund is called U First Capital.
Right.
And like you were alluding to, we have created a fresh approach to the world of venture capital, where
Right.
we are where we are investing at the junction of corporations and startups, and
Right.
how that creates a very unique opportunity, but almost a mega opportunity that has not been tapped so far.
I completely agree with that one, Sanjit. Sanjit, I'm going to talk to you a little about you first, right? And I think what's you've kind of given a reflection of the construct, right? But tell me a little more in terms of how it's structured, right? So between the venture capital fund and the venture capital as a service, right, which is largely available for corporates, right? What are the structure of these independent initiatives that are there at you first?
Yeah, absolutely. So we saw an opportunity where corporations wanted to do venture capital,
Right.
but they didn't know how to do it because corporations are mainly execution machines, not really innovation machines.
Sure.
Innovation in corporations is more about product development, improving margins, and reducing cost. So the grounds up in innovation or the orthogonal innovation doesn't really thrive that well in
Right.
corporations, and that's where we come in to help corporations look at external innovation via our venture capital as a service for
Right.
corporations. And that's a very unique model. And we have signed up over 10 corporations so far, companies like Dow DuPont, Hitachi, and so on. And there are a bunch of Japanese corporations as well. So
Right.
the model exists because there is a need in the market for driving innovation to a 10x level that
Right.
corporations are unable to do internally. And also on the startup side, it helps them too because they want to partner with corporations, but corporations are like an ocean. They don't know who to
Right.
talk to,
Right.
and they
Right.
struggle at that. So we try to bring that junction together beautifully and very efficiently as well. And alongside, we have a fund under which
Right.
we do several investments, and we have done 11 investments so far, out of which we
Right.
have had 3 exits. In
Right.
fact, the fourth exit, called a company called Nextdoor, is going
Right.
public
Very
in
interesting.
Q4 via Khosla Ventures SPAC. So that's what we do in a nutshell.
Very interesting. Sanjit, I was in a similar conversation very recently, right? And more about corporate innovation, right? And talking to a very large enterprise, and I kind of agree with what you're saying, right? That corporations are kind of designed to undertake certain activities, right, and continue to optimize that, right, and not necessarily geared for innovation. And this is something that I realized in that conversation, where while they are very large when it comes to say the FSI sector, robotics, manufacturing, so on and so forth, right? There's little understanding that I have around innovation, right? And they really don't know how to navigate through that, right? It becomes hell. But I think what is another very large problem that we come across is the lack of entrepreneurial spirit within organization, right? They're not nurturing entrepreneurs within the organization, right? What are your thoughts about that? I mean, that's a huge challenge. Even if you bring in innovation in a setting like that, right? Unless you have people who want to run it day in, day out, right? With that passion, with that energy, with that focus, it becomes problem, right? Innovations don't necessarily thrive. What are your thoughts about that, right? So while you evangelize this, while you enable this, right? Uh,
Yeah,
do you still feel that this is a gap that needs to be plugged and managed?
yeah, it's a huge gap at the system level from an
Sure.
innovation standpoint. And like you said, you need the right DNA of employees in a
Right.
corporation to be able to drive entrepreneurship forward.
Mhm.
But that motivating factor is missing in a corporation because employees think like employees, not as
Right.
founders. And there's a huge difference in thinking between the two.
Right.
And entrepreneurship is a series of failures.
Right.
People view entrepreneurship as just a success, whereas
Right.
entrepreneurship is actually a series of failures. And you have to fail 90% of the time to get to the final 10% success.
Right.
But and nobody regards you for those 90% failures. And the
Right.
reality in a corporate world is that the CFO does not have the patience to wait for that 10% success to come.
Right.
And that's why entrepreneurial efforts within a corporation typically do not succeed that well.
Very interesting. And Sanjeev, is that the case in a global environment, or do you think that's a very geography specific problem, right? Because I mean, when we look at say the Asian continent, when we look at India market, right, this is a complexity that we realize also because the market is extremely complex, right? But do you think this is a problem which exists in a homogeneous market like, for example, US as well? Right. Again, I think Europe has its own complexities, but do you think this is a constant problem? Approach mindset is a constant problem.
I think it to a great extent it is a constant problem, but it is aggravated by geography.
Right.
And if you look at the Indian context,
Sure.
the market is complex to start off with. You can say on one hand, India has a huge market, teeming population with access to cell phones, smartphones, ready to
Right.
access services, etc. Yes, awesome. But on the other hand, it is also a fragmented market where
Right.
you have to deal with tens of languages, in fact a lot more dialects,
Right.
different cultures, and very different behaviors and responses to a product. So you cannot expect to create one size fits all product for across the nation within India. And if you look at the
Right.
broader Asian context, corporations struggle to be able to drive those products that can scale. And that's
Right.
that's that's where they need help. And it is truly a global problem, and the way corporations are set up. And partly it stems from the fact that every quarter corporations are required to drive top line and bottom line and
Right.
present it to Wall Street. That's where the
Mhm.
crux of the problem starts.
Very interesting. Sajid, I have a follow-up question on that one, right? But before I come to that, what are the core areas of focus that you have, right? Are you essentially focusing on enterprise tech, deep tech, SaaS? I mean, which is the focus activity, right, across the venture capital as a service for large corporations, as the service activity, and the fund that you have, right? Or on the fund you are like slightly more liberal, or the thesis is different, where you can possibly look at consumer tech companies, and I think you have a few of them already in their portfolio, right? Where what is the thesis there across these two subsets?
Yeah. The thesis is very simple. We actually go across various sectors. We have
Okay.
corporations looking at the next gen healthcare solutions,
Right.
especially driven by COVID. We have
Mhm.
corporations looking at next gen travel solutions.
Very
How
interesting.
will travel tech evolve as a result of COVID, for example? And we have corporations looking at enterprise solution, digitization. AI and digitization are disrupting every sector. So that's a
Right.
common theme we see across all of our corporations where they say, hey, I am going to be bombarded by data and AI. I don't know how to embrace it. How do I use it? How do I make this my innovation engine for the future? And that's something that a lot of the legacy corporations struggle with.
Right.
So so those are some of the core areas when we talk to corporations. And from an investment standpoint,
Right.
we have largely focused on enterprise software. We have also invested in some social networking companies.
Right.
Um, Among the three exits that we have, one of them was Pinterest, which is a social networking company. Then Palantir, which is a big data analytics company started by Peter Thiel here, they went IPO last year as well.
Right.
So, and we are investing in cutting edge companies. Like other examples are ThoughtSpot, which provides like business intelligence as a search
Right.
software. So these are the kinds of companies that we are going after that are category leading or have the potential
Right.
to be category leading in a market that is totally unbounded. So I hope that gives you a
Right.
sense of how we look at the markets when we invest.
It does. It does, and and I think one thing I very clearly realize it's extremely cumbersome as a process, right? Because I think you're playing it for very different sectors, right? And I think to build a thesis around that, right? And like I said, I was in a recent conversation, right, with a large corporate, who's wanting to do something similar in the same, in a similar format, right? And the problem is that how do you cut it, right? Do you look
Yeah.
at your existing product play? You look at your existing your current engagements, and then you see which are the gaps that you can fill, or you start fishing differently, where you're saying that these are potentially the solutions of future that you need to have as part of your portfolio, which you can potentially cross sell. And I think it's an extremely complex one, and I can only imagine the complexity that you deal with when you're dealing with large corporates. I think as a fund, it's, of course, it's very clear, right? I think it's a fairly more clearer operation, right? But this must be an extremely complicated one. The corporate side one must be very, very difficult, right? And must be very cumbersome, right? To understand each one of them, understand their unique requirements, because they like literally have little idea of what's happening in the innovation ecosystem. And plus, it needs you to paint a very large macro picture and build a very unique thesis for each one of them. How complicated is that particular bit?
It is Ashu. It is a very complex problem, and it also varies sector to
Right.
sector. Some sectors are more advanced already in their reformation path, whereas some sectors are still at a thinking stage. So
Right.
it depends where on the cycle the sector is, and then we formulate a strategy based on where the sector is and how it can go. We really look at the changes that are coming in each sector and how they're creating unique opportunities for the corporation to
Right.
innovate in via venture capital investment. And that's where we excel at based on the feedback from corporations.
Sure. Sanjit, like I said, I have a follow-up question, right? And how does this model work, right? So when you're, for example, engaging with corporates, right, are you operating as a venture capital player, or is this a consulting model, right? Differently structured vis-a-vis the fund vehicle that you have. How does this relationship play out from a structuring standpoint?
Yeah, great question. So mostly it is tied to a fund model where corporations allocate a specific amount of capital
Right.
and they want to invest, but they need guidance and help, and they want us to manage that process. So
Okay.
that's how most of the times it works as. And without investment, it becomes hard for corporations to also get the cycles of learning. So they
Right.
have to create an investment vehicle, but since they lack the DNA to manage and define the investment strategy, that's where we come in.
Very interesting. Sanjeev, is this is something which has been prevalent in the West, right? I mean, M&A has been a culture, right? Inorganic growth has been a culture. It's almost an institutionalized practice, right? While we, of course, talking of it in the VC context, right? But I think the big fours are essentially specialized in this entire thing, right? unlike developing nations, where M&A is still kind of picking up, right? We're still, we look at companies from a cost of replication standpoint, right? And we still believe that building the right team by building the right team, we could kind of build the same product, right? Do you think that's a right philosophy, right? For and this is more an India context question, right? Do you think that's the right philosophy, where you start looking at companies which you can cultivate inside rather than going out and building, and say looking investing in companies that already exist, right? I mean, do you think that's a misnomer? That's a wrong thought process? Because this is something that you come across on many occasions, right? In many conversations. That I mean, why invest say a few $1,000,000 when you can replicate that, which is not necessarily the right way to do it, in just about at say 1/20th the cost, right? Or 1/10th the cost. What are your thoughts about that? Is that the right way to look at it?
You really have to not look at the cost factor when you are assessing innovation and the potential impact of that innovation. You really have to look at time to market and the velocity of innovation you can develop. If you can do it in-house, like how a company like Apple does, more power to you. Kudos to you for being able to do it. But there are only a handful of companies across the world that are able to do it consistently for years and years. And that's where they start looking externally, whether it is M&A or venture capital investment. That's where they realize, oh, I can do X internally, but I can get benefit of 10X externally. And at 1/10 at the time frame. So the velocity of innovation is much higher when you start acquiring something outside.
Very interesting. Sanjit, I was in a recent conversation, right? And this was a conversation with a founder who's based in the Valley, while they've developed the product in India, right? And one point that he highlighted in the conversation was essentially that there's a brilliant cost arbitrage when you're building in a country like India. I mean, this is something which has existed for the longest time, right? But when you are building in a country like India, right, and there are very clear pressures on, I think post-COVID, there are very clear pressures on each organization, large or small, right, to essentially contain costs, right? This is like a perfect time for many enterprise tech SaaS companies, right? In a more mature market, you just have to be out there, and there is, I mean, velocity and adoption has always been there, right? I think West has essentially been a very DIY sort of a market always, right? Do you think there's a huge possibility in a post-COVID sort of a world where many companies stand a chance, right? Having their low cost base, they can offer solutions at a much more competitive price vis-a-vis their counterparts in the US or some of the other slightly more expensive markets, right? Do you think that's an opportunity which is opened up in a big way?
I think so. I think COVID has flattened the world greatly to the advantage of a lot of the Asian countries. And today you can build a company really based out of anywhere, including in India, and sell to the Western world, which is the early adopter market, especially for enterprise software, using enterprise software as an example. So you can play the cost arbitrage game, and you can even play the market advantage game by moving really fast, building it in India, and having a sales team, a biz dev team, let's say in the US. So you can play that game beautifully, and I think that we're gonna see a whole bunch of B2B SaaS software companies coming out of India in the next decade that are gonna be big unicorns.
Very interesting. I like the way you put it. And I like that entire positivity around the possibility of having many unicorns, right? Who are serving global pioneers, global leaders, right, in Western markets. I think we need to have that psyche of export, right? I think which in a way we've largely been an inward-looking market, right? But Sanjit, I would want you to throw some light, right, and possibly help us understand this better, right? India in a post-COVID world has also become a very exciting opportunity, right? We've not seen. I mean, we've seen a huge influx of capital. Now that influx of capital is essentially on the foundation of India becoming a little more homogeneous. And that was largely because the consumption trends are now there's a visibility, right? The regional factors, the regional layers that we had are kind of going away, right? Indian companies are also now have become very quick in terms of adopting tech, right? I was recently in a conversation with the chief digital officer of Vedanta, right, where they're managing a very large infrastructural play, right? And their turnaround time in terms of adoption of tech has become extremely quick, right? Which was earlier possibly not the case, right? It had to be vetted at many layers. It was looked at a cost center, but now it's become as a very core mechanics of delivery, right? Assessment. Do you think this trend that we see, which is Indian companies or other countries where their great products that are getting built are essentially doing it for the developed world, but many technologies that are essentially available in the developed world are being designed for that ecosystem will now also be brought to India, right? I mean, do you see the trend also reversing over say next couple of years, where the possibility of paying is kind of coming in and less of bureaucracy, right? Which is typically a challenge for uh, companies coming out of that market to enter complex markets like India. Do you think the trend will reverse?
Yes, I think the trend is already reversing.
Okay,
The startups in the US always like to sell within the US first because US is an early adopter market.
sure,
This is the market where a three-person software company can walk into a large corporation's office, let's say Dell or VMware, etc., and
right,
and get a pilot and then hopefully a
right,
production um,
right,
contract as well. That was very difficult to do in the Indian context for a startup,
right,
whether it is
mhm,
for an American startup or for an Indian
right,
startup for that matter.
right,
But I think that mentality is changing within
right,
the Indian context now. And that is changing at two fronts. One is the legacy corporations
right,
in India, even like the Reliances or the Tatas of the world are embracing
right,
the use of AI and big data, and hence they are more open to giving opportunities to startups. And
right,
also, there are new tech companies that are
mhm,
becoming large corporations themselves. Look at Zomato IPO, look at
right,
Paytm. What do you call them?
right,
I would start calling them corporations by themselves.
right,
So, and right, so Flipkart is another example. So they give opportunities because they came out of entrepreneurship in the recent
right,
years. They
right,
understand the need for embracing startups in India.
right,
So that trend is changing for sure, and it is getting much easier for an American startup to go to India and sell to corporations, but also on the consumer side, also on
okay,
the consumer side, because of the homogeneity that is being created across the nation by the consumer base, there is a huge opportunity for US, for Western startups in general, not just US startups, for Western startups to go embrace that market. I think that mindset is changing on both fronts.
but how important is the ARPU, right? How important is the
Hmm.
average revenue per user, right? Because
Yeah,
in a
Arku.
market like US, I mean, how do you prioritize, right? Do you are there is there a willingness to go in a lower ARPU market which got mature over a period of time? Is that something which many of these organizations are okay with?
The key thing to think about is that the metrics for a corporation for any product
Sure.
in the US and in India are not just going to be around the financial metrics like ARPU.
Right.
They're also going to be around data.
Interesting.
Data is the new oil,
Right.
and and any company, startup or a corporation that can embrace that mentality and start collecting data and then mining data by data analytics, etc., and then making use of it is gonna be the big winner.
Very interesting.
So gone are the days, I think, when companies will roll out products with just the ARPU
ARPU.
and other financial metrics in mind. They will actually also think about what data can I collect? Can I not get this data elsewhere in the market? And that's where India has a
Right.
huge advantage. The flavor of the customer, the type of data that the customer generates is quite unique to the Indian context.
Right.
So if a company wants to enter the Indian market, they will not just think of ARPU, they will think of data and the market share. I think, and then ARPU will follow. Even if ARPU is low initially, there are other ways to monetize.
Right.
So the over time accumulated ARPU will be quite high, much higher than what it seems initially.
Very interesting. And I like the way you put it, Sanjay. I mean, honestly speaking, when I was thinking of it, right, and I think many founders that we speak with, essentially, you tend to, that conversation essentially navigates towards ARPU, right? And that's the prioritization of market. But I think it's important how you cut it, right? Where you're saying data that you are working with is extremely important because it will help you. It helps you build a long tail, right, of many
Yeah,
services that you can
and it
offer in the
helps
process.
improve. Yeah, it helps improve the product. And we are in a machine learning and AI world, and that needs data. You
Right.
need to feed AI engines with data. You need to improve AI engines with data. That's where you succeed.
I think we are, as a country, we're fairly in an early stage, right? I think a lot of work is still happening at a foundational level, right? When it comes to getting this data. I mean, data's existed, right? It's not unfortunately existed in the right form and way we can, make it intelligent, intuitive, smart, right? And I think there is work which is now started to happen, right? I think everybody's kind of re-engineering that bit. Sanjeev, Zomato IPO happened, right? And you kind of you mentioned about it in one of the points that you sort of made, right, earlier in the conversation. Uh, what did you think it's done to the Indian market, right? And the beauty of this thing is, and why I ask you this thing is that you are at a distance, right, where which is and that's where a lot of money is coming in from, right, which is the US market. How do you see this event, right, changing the confidence in the Indian ecosystem?
It's a watershed event in the entrepreneurial ecosystem in India because it is solving the big problem that venture capitalists always had in the Indian startup market, which is
Right.
lack of liquidity.
Mhm.
And if you look at the Indian market, corporations have traditionally not been very acquisitive,
Right.
or if they acquire for low amounts, which means that M&A market from an investor standpoint is not really strong. The IPO market
Mhm.
traditionally has not been that great within India, but
Right.
those things are changing now, especially with Zomato. I think it's a milestone IPO in the Indian startup context, and now
Right.
with a series of other IPOs coming up, tech IPOs coming up,
Right.
Paytm, etc., you will see a big shift in the mindset in the Western VC world, which says now, okay, I can see a
Yeah.
clear path to liquidity for my companies
Right.
just within the Indian context.
Very interesting. Sanjeev, across many people who existed, right? Many organizations which existed, which are listed entities, they're not necessarily happy with this event, right? And essentially the argument in that front is that we have a certain responsibility towards the stockholders, the shareholders, right? In terms of generating that profitability, generating that growth, and being able to pay them dividends, right? Which is not necessarily correct in an environment which tech companies operate in, right? Tech companies essentially, extremely high growth companies which want to build a certain relationship with the customer, and then will play out in terms of profitability over a period of time, right? How do you see that, right? I mean, is this an aberration? I mean, the kind of enthusiasm that we've seen around Zomato, is this an aberration? Because we were essentially sitting on massive amount of liquidity at a household level, and of course at globally, right? There was a huge liquidity. So, do you think this is an aberration, or this is something which could possibly continue when we see other companies getting listed, right? Which operate in a similar environment, right? Which are not necessarily profitability driven, right? They're extremely high on engagement, extremely high on consistency, repeat. They're getting into a duopoly mode. Profitability is something which is going to come in later. Do you think similar excitement is going to be there visibly with some of the other companies that get listed, and this will not be an average?
Yeah, I think if you look at the US IPO market, most of the
Sure.
tech IPO companies, except companies like Zoom, most of the
Mhm.
tech companies, when they go public, they are not profitable.
Right.
And then, profitability is also a function of growth
Right.
because you are taking the money that you could put in the profitability bucket, whereas you are actually investing in future growth with that money,
Right.
and hence driving high growth rate for the top line.
Right.
So this is actually a norm in terms of the mindset for tech companies
Mhm.
going public in New York.
Right.
In India, it is a new mindset.
Right.
And traditional investors in the Indian IPO market have expected the metrics to be like the legacy metrics: show me top line growth
Right.
and show me bottom line growth also.
Right.
And now you're going to see where you can only see top line and their bottom line is in red for a number of years,
Right.
for probably for the foreseeable future. And I think that will be the norm for several tech startups going IPO. And this is something that the IPO investors will have to embrace as a mentality over time. As long as the engagement is high, user base is high, user base is sticky, and the use
Right.
case that the tech company is going after is resonating and is just growing unboundedly.
Right. Interesting. Sanjeev, I'm gonna ask you a very COVID specific question, something that I mentioned, in one of my earlier questions, right? Is COVID kind of fast tracked our pace of digital adoption, right? I mean, we became overnight. I mean, I think that's a little exaggeration, but I'm saying within that very tight period of just about 4 5 months, right? We adopted technology how, right? As consumers and as businesses, right? Also, what happened was homogeneity, something that I mentioned, right? Now, one of the things that I've heard from many investors, right, especially in the Western world, is that they've been one, of course, is liquidity, right? Concern of liquidity, why they've not kind of looked at India as a market in its true potential and sense, right? But also the fact that because India operated at layers and levels, right? And of course there was elements of bureaucracy, which essentially meant there was a huge delay in process, right? There was, we looked like a confused play, right? We looked like a confused setup. Is that something which is going away with a homogeneous market, right? Or where new mixes will now be adopted, accepted, right? Do you think, event of liquidity, external funding is going to be higher? We're going to see more participation coming into an India-like market, because the kind of consumption appetite that we have is phenomenal, right? We're adopting to do things much faster, right? It's becoming as transparent as a Western country is, right? Do you think we're going to see a lot of smaller, larger supporting there? But do you think smaller participation is also going to increase in the India-like market?
Yeah, absolutely. So to answer your first part of the question, COVID has given a Mike Tyson like moment to startups and corporations. Mike Tyson used to say, you have a plan till you get punched in the face. And that
Right.
plan that you might have till you get punched in the face is no longer valid at that moment. So companies have had
Right.
to re-strategize and come up with totally new strategies overnight due to COVID, and that's overall a good thing. And COVID is also the biggest driver for digitization and adoption of AI.
Right.
And if you look at it, the problem is that human beings carry the virus.
Right.
All of a sudden, the human being is the problem.
Right.
Machines don't carry the virus,
Right.
right? So, but and hence the proliferation of intelligent machines, whether it is at a software level or at a hardware level,
Right.
is happening across industries. But machines need intelligence, and
Right.
that's where AI and data analytics, etc., come into play. So COVID has given a huge push to companies
Right.
that can play to that mindset, that the
Mhm.
fresh mindset in the market. And that's
Right.
why you are seeing a 2 to 3x adoption in cloud. You are seeing companies like DocuSign go 3x in their stock performance within
Right.
12 months,
Right.
and so on. So and that trend is only going to continue. In fact, banks are saying, hey, I have retail branches, but I prefer you don't come to the branch. I'll send you
Right.
paper online for signature. That never used to happen in pre-COVID days,
Right.
right?
Very interesting.
So that is definitely happening. And then your second part of the question was around homogeneity and how that has created a consumer appetite. That has just been one of the best things, I think, especially in the Indian context, because that
Right.
removes so many barriers, regional barriers, especially language, culture, etc. all of those barriers for adoption of new technologies post-COVID.
Sanjit, a personal question, right? Are you tempted to come to India? I mean, I'm sure you keep traveling, right? But are you tempted to come to India? Is there an India practice that you're building, right? Because, all of a sudden, we are part of every conversation, right? At least in the investing ecosystem, investment world, right? Is there a temptation like that?
Definitely. I think especially post-COVID and especially looking at the new tech IPOs, I think the Indian market is at a big inflection point. So we are actually in the process of building an India investment strategy.
Right.
And defining the top 3 nuggets of opportunity within the Indian context. And we feel that there is going to be a lot of opportunity at the junction of multiple sectors, where you can drive new technologies that span across multiple sectors. And that's one of the areas we are looking quite deeply into.
Very interesting. And can you tell me some of the areas that you're excited about, right? I mean, because right now I think everything is just so amazing, right? I mean, I'm talking to fintech founders, I'm talking to, and those intersections, right, that you spoke about, right? I'm talking to agri-tech founders, who are working at the intersection of agri-tech and fintech, for example, right? And there are some beautiful, unique opportunities that are coming in. And like you said, right, there is enough of data that these companies are building, which could be synthesized to build some incredible new age models, right? And those are some very interesting intersections, right? So any particular choices that you have on that front, or is that still under work? Still waiting for a bunch of things to come clear. I think we're still talking about the third wave, right? I think, and we're a large ship, right? You need to be in a fairly comfortable zone, right, to being able to predict, right? What happens in market A does not necessarily happen in market B within this country, right? So, is that so? Where are you on that thesis right now? Is there a little bit of a clarity, something that you can tell me about?
Yeah, happy to. We have seen a lot of innovation in India in sectors like retail. We've also seen, in mobility, via transportation, Uber, Ola, etc., and also in the hospitality industry. But I think there are some underlying sectors like supply chain within India that have to be revamped, and they create a huge opportunity, and they go across multiple sectors. You can drive synergies across sectors also, and you can bring a lot of tech to those sectors to bring improvements in terms of efficiencies, especially. So that is one. And then at a vertical level, agriculture tech is definitely one area that is prime on our mind, and how that is evolving within the Indian context and where it stands with respect to the Western context. And the gap we see is a huge opportunity. So there are vertical plays that are beyond the obvious ones like retail. And then there are the underlying sectors like supply chain that are going to go across different verticals that are going to be humongous.
Very interesting. There are horizontals across verticals.
That's right.
Somebody classically said. Sanjit, I'm sure there are many Indian companies that, right, maybe at a personal level, right, not necessarily through the fund. I think because your fund construct is largely focusing on the value, right? And the India piece is relatively new. Is there an anti-portfolio, right? Some companies that you saw and you said, we should have participated, right? Is there an anti-portfolio?
We looked at Reliance Retail, honestly speaking. We also looked at Flipkart in, I would say, in Series BC level. That there are some companies that I think we should have gone after. It was just a matter of prioritizing at that time between what we had here in the valley as opportunities versus going after India. And we when we want to invest in India, we want to do it with full conviction. You don't want to do half-hearted efforts. Those efforts don't go. And we also want to be able to bring value to our investments. It's not just about dollar. It's a dollar plus value equation. And that's where we want to. That's where we feel we are unique, because we can even bring corporations as customers or partners to some of these startups that where we invest into. So that's where it becomes very interesting for our portfolio companies as well. So we want to be able to do it in the right manner. That's why we looked at some of these companies, but decided not to go after those. But obviously they've done well, and they will probably continue to grow in the next decade as well.
Interesting. Sanjit, that was the end of the conversation, right? And last few questions, right? One question is essentially, you've been working with many organizations, right? Right, and helping them on the innovation aspects, right? How they should sort of say look at innovation, dissect innovation, like plug in innovation, that entire acquire innovation, invest in innovation. I mean, the entire stack, right? Uh, how important do you think it's co-development has become for development economies, right? And largely, like I mentioned, right, when you talk of large enterprises in the developing economy, there is always a priority to cater to their existing market because that market is still not kind of plugged in. It's still out there to be acquired, right? And they typically tend to miss out on the innovation aspects, right? How important do you think in a post-COVID like environment, right, where the consumer is actually kind of leapfrogged into being more sure, right? And that arbitrage that they had, or the question that they had of, say, naivety, innocence, lack of exposure is kind of reduced, right? How important do you think in a context like that has co-innovation, co-development become in a developing market context?
Yeah, great question, Ashu. So I think co-development is a brilliant idea, but where only works very well only in the context the where both parties are equally motivated for developing a product for the greater good. And it could be
Right.
greater good of the society or greater good of both parties. And if the motives are aligned, the missions are aligned, then it can work beautifully. And you can do it in an active manner, also in a passive manner. In an active manner, two corporations or one corporation and a startup can work together and say, hey, I'm going to develop this product with this mission in mind. Great, awesome,
Right.
but in a passive manner, a startup can, or startup or even corporation for that matter, can actually co-develop a product with consumers
Right.
without the consumer actually realizing that he or she is a co-developer of the product.
Right.
Because innovation is iterative.
Right.
You roll out a product Monday morning. By Friday, you realize, hey, this worked, this didn't work. Then you iterate on it. And that becomes a co-developer model for you. And over a period of 3 months, you have a much better product than if you would have done your own internal UX testing, etc., and then rolled out the product. So we are in the era of go fail fast, but go learn fast. More
Right.
importantly, the faster is the cycle of learning, and how faster is going to be the cycle of innovation.
But don't you think problem is acceptance, right? I think people don't want to accept that it's not working, right? I think and a lot of effort gets into to kind of feeding that because there is ego, right? Don't you think that's a problem, right? Especially when you talk
Yeah,
about large enterprises.
yeah,
People
there
don't
is.
people don't want to be proven wrong, right? I mean, that's a huge handicap.
It is, and they have to learn that once you take risks, failures are part of life,
Right.
and that's a mindset that has to be embraced in the corporate world. It still exists more in the U.S. Context than in Indian context, but I think it's changing. But that is the core problem at a mindset level where failures are not worn as badges.
I think, Sanjeev, a lot of your job is, my sense is a lot about coaching, right? I think evangelizing, getting the people to think, right? I think because, the expectations in an environment like the one we operate in is very, very different, right? And I think to an M&A, the expectation is very different. I think this angle and element has to be brought in, right? That, there are going to be failures when you are kind of doing that. And I think my sense is a large part of your job is actually about navigating through those preconceived notions.
Yeah, absolutely. And making sure the board of the corporation is well aligned with what's to come. You're not going to only have nuggets of success. You're going to have venture capital model by design delivers one or two big successes out of 10 investments.
Right.
That's by design. So it will result in five or six okay successes, two
Right.
big hits, and the remaining probably going south. And
Interesting.
that's but each of those 10 companies, and especially the ones that go south, teach you the most.
Right.
So the learnings you get from the failures are actually the highest than from the winners. And that's
Interesting.
where corporations need to understand more.
Uh, Sanjeev, my second last question in our conversation today. is that there are many factors that have now become visible, right? Something, and I'm talking India first, largely because we still are assessing the impact that is happening across, say, Indonesia, Philippines, Vietnam, right, on the COVID front, right? And there's still sort of grappling coming out of it, right, in a certain way. Um, there are certain factors that have now become visible, right? Not areas of health, right, in terms of the consumption of content, right, and so on and so forth, right? Repeats, all of that factors are kind of now visible, right? Which essentially give you a certain sense of the kind of influence that is playing out in the lives of consumers, right? Um, which is right for a consumer tech company as well, which is right for a large enterprise as well, which is eventually kind of getting consumer, right? Because that's going to really define their product portfolio play, right? Eventually, which are some of the factors that you think are still need to sort of play out a little more, and for the market to kind of emerge as the destination of choice, right? What are some of those factors that you still, for example, you think need to be a little more clear, right, in a post-COVID event?
I think content consumption, like you mentioned, is definitely happening. But beyond that, I think a removal of the middle layers in various verticals is going to be
Right.
a key for adoption of new technologies. And sometimes we feel there are just too many middlemen in between
Right.
trying to eat the cake. And we feel that once those layers are removed and you get a direct to consumer D2C model in various sectors, that's where innovation is just going to flourish, whether it is in agriculture
Right.
tech, whether it is in other sectors as well, or even education, etc. So that's where we feel the adoption of new technologies is going to just jumpstart big time. And then you will see the pace of the consumer's mindset growing as well. And you will see the hungry Indian consumer asking for more, probably more than what the tech startup ecosystem is able to build. And that's where the nation succeeds
Very
because the
interesting.
consumer because the consumer becomes the driver of the innovation engine for the nation and is demanding for more than what you can deliver, and that's the spot where you want to be at.
Sanjit, how I wish I had asked you this question right at the start, right? Because, this just opens up a very different conversation, right? I mean, I've been talking to many D2C founders, right? Uh, you know, Founders who are essentially building direct-to-consumer brands across layers, right? And then there are brands again which largely operate in the D2C category, which have actually chosen to go offline, right? Uh, and I think we have a market with, I think we've established with our own set of complexities, right? Where touch and feel is very important, but also the fact that we've been a liquidity starved nation, right? We've been a cash starved nation, right? And I think those layers have essentially come up to create that event of liquidity, right? As an organization, if my risk can kind of reduce because there is somebody who's coming in the middle, right? I think I think those are mechanics that kind of emerged because we were a cash starved nation. But I think a lot of that is now going away, and I think newer models are coming. And I completely agree with what you're saying. I think the newer world is essentially going to be about direct to consumer, where innovation is going to happen, like you adequately highlighted, right? It's going to be a co-development and a co-innovation setting, right? And that's going to lead us into a very beautiful environment, right? And
Yeah,
which
and putting consumer and
absolutely.
putting consumer at the center of the innovation engine, not the startup, not the corporation, not the middleman.
Absolutely. Sajid, my last question, right? What will be that word of say one advice that you have for founders, right? Who are say building in India for India market, building in India for the Western market. What will that one advice be that you'll have? I know it's a difficult one, right? It's you have to give more context, right? But something which is horizontal across, I think each layer. What will that be?
The world is your stage now
Interesting.
more than ever. So be fearless, be bold, think 10x higher than what you have been thinking. This is the time to think
Fantastic.
big and command the world. But stay focused. Find a use
Right.
case that resonates and then replicate it. And that's where you win. And one of the things that I think Indian founders really need to do a better job of is go into the depth of the use case.
Right.
Don't tell me I can just sell content. No, tell me what content for which audience and in what context, etc., etc. So be very focused
Right.
and be in depth.
Very interesting. Sanjeev, thoroughly enjoyed this conversation. I wish, we could go on. But I think in interest of time, we're going to come to bring this to a close. But me, my team are thankful for you to take out time. It's an extremely odd hour. But I think some of the points that you kind of highlighted, I'd love to have you back with us very soon and discuss more around that point, right? Specifically around co-development, specifically around cultivating teams which would actually go out and win, right? And of course, a lot of M&A possibilities that emerge, right? And I think building that capacity, I think this is a conversation that can go on. And I'm looking forward to discussing each of these aspects with you in some of the upcoming sessions. Thank you so much, Sanjit. It was a pleasure to have you with us. Thank you for taking the time out.
Thank you, Ashu, and thank you to Asia Tech Journal and the entire team for all the effort as well. Honor is all mine. I love the conversation and I look forward to continuing it. Thank you so much.
Thank you. Thank you.